In this video, I'm going to talk about how any business, including cannabis businesses, can get up to $26,000 per employee in refunded payroll tax credits. Now, this is cash paid back to your business for keeping employees on during the pandemic. But I'm also going to warn you about the scams that are out there targeting you and how you can avoid them. Legitimate government program, yes, but some shady bad actors out there trying to exploit it. So I'll show you the right way to get this money. Let's get to it. Hi folks, Chip Schweiger, the Green Leaf CPA, and I help everyday cannabis entrepreneurs build and grow exceptional businesses using the same growth tips that the big guys use. Welcome to Ask the Green Leaf CPA. In today's video, let's talk about the Employee Retention Tax Credit Program, sometimes called the ERTC or the ERC. So way back in March of 2020, Congress created the ERC as a way to provide small businesses with financial relief during the pandemic. Since that time, the ERC has been expanded twice so that more struggling companies can use it to cut down on their federal tax bill. The program was initially set to expire on January 1st of 2022. However, the 2021 infrastructure bill retroactively accelerated the credit's end date to October 1st, 2021. But don't worry. If you missed out on it before, the ERC program has expired, but eligible employees can still claim a credit for their 2020 and 2021 taxes by amending their returns, and I'm going to show you how. Hey, if you're new to this channel, go ahead and hit that subscribe button and click the bell so that you'll always be the first to get my tips and tricks. So here's what you need to know about the ERC and how to take advantage of it. First, what is the Employee Retention Tax Credit? Well, the ERC is a credit that provides tax relief for companies that lost revenue in 2020 and 2021 due to COVID-19. Now, the ERC program was designed to incentivize businesses of all sizes to keep employees on their payrolls during this period of economic hardship. Eligible companies can receive as much as $7,000 per employee per quarter for the first 3 quarters in 2021, which equals $21,000 per employee potentially coming back to your company. They might also qualify for a break of $5,000 per employee for all of 2020, which gets us to the max of $26,000. The ERC has changed over time, so it can be a little confusing to track where things stand today. When the CARES Act was passed in March of 2020, it included the ERC as an option for financial relief for businesses. But companies could only take a forgivable Paycheck Protection Program, the PPP loan, or the ERC in the original bill, which meant really only a handful of them actually got to use this credit. Congress then amended the ERC in December of 2020 and then again in March of 2021 so that more companies could take advantage of this valuable credit. After the passing of the infrastructure bill on November 15th of 2021, the ERC's initial expiration date was moved up by a quarter, effectively ending the credit by October 1st, 2021. Now that's great, but it also opened the door for some bad actors taking advantage of you and this program for their own profit. And I'm going to talk about how to spot them in just a bit. So what companies qualify for the ERC? Well, the ERC was designed to help small businesses that lost revenue during the pandemic, but only some companies are eligible. To qualify, private companies, including nonprofits, must meet one of the following criteria. Either your business was ordered by a local government to fully or partially shut down in 2020 or 2021, or your gross receipts for a single quarter of 2020 fell by 50% versus the same quarter of 2019, or your gross receipts for a single quarter of 2021 decreased by 20% versus the same quarter of 2019. Now, if your company was not in business in 2019, you could use a corresponding quarter in 2020 to show you had a revenue reduction between 2020 and 2021 and qualify for the ERC. Notably, government entities and sole proprietorships are not eligible for the ERC. If a self-employed person has staff on payroll, however, they may qualify for the ERC for the wages paid to the other employees. So you may be asking which employees do count towards eligibility? Well, for companies with 100 or fewer full-time employees all of those employees, regardless of whether they're providing service during the designated period, all of them count towards eligibility. For companies with over 100 employees, only the full-time employees who are being paid but not providing service during the shutdowns and or a reduction in the gross receipts count. And a pro tip here, employers may not claim the same employee for the ERC credit and the work opportunity tax credit for the same period, nor can they claim the same wages under the ERC and the employer credit in the Family Medical Leave Act. And as I mentioned before, self-employed owners are not eligible for it, nor are 1099 contractors. They've got to be full-time W-2 employees. I know, I didn't make the rules, I'm just letting you know what they are. So here's how to calculate the size of your ERC. If you're eligible, claim a refundable credit against what you typically pay in Social Security taxes up to 70% of the qualified wages paid out to employees. Now, as of January 1st, 2021, qualified wages for employers with fewer than 500 employees are those paid to all full-time employees during which there was a full or partial shutdown or a quarter that had a decline in gross receipts. For employers with more than 500 employees, qualified wages only refer to those paid to employees who are not providing services during that same time period. Now, these qualified wages are limited to $10,000 per employee per quarter in 2021. Therefore, the maximum ERC available is 70% of $10,000 or $7,000 per employee per quarter. For example, if you're a dispensary that had a 20% reduction in gross receipts in Q1 2021 versus Q1 of 2019, you can then request a tax credit up to $7,000 per employee for the first quarter of the year. If that trend continued through the rest of the year and you have lower gross receipts, you could potentially claim the ERC for Q1 through Q3 of 2021. Now, for a business with 30 employees, for example, the credit could be worth as much as $630,000 in 2021. Hypothetical case, of course. Now, ERC and PPP can't be applied to the same payroll. One of the most significant changes Congress made to the ERC in late 2020 was allowing employers who took first and second PPP loans to also use the ERC. However, I'm not aware of any cannabis companies that were able to actually take PPP loans, but if you do have a mainstream company that did take a PPP loan, just know that you can't claim the ERC credit for the same wages that you counted for PPP forgiveness. Basically, you can't claim the same payroll costs for both ERC and PPP. No double dipping. So let's talk about how to claim the ERC refund. Though the ERC ended in October 1st of 2021, businesses can still file for a retroactive ERC refund by filing Form 941X. Now, this form can be used to adjust employment taxes filed within 3 years of the original return or 2 years from the date the employer paid the tax. Therefore, eligible companies that did not initially claim their ERC could potentially do so through 2024, depending on when they originally filed or paid their business's taxes. Employers should keep in mind that this retroactive refund is only available for the 2020 tax year, as well as the first 3 quarters of the 2021 tax year. Now, the eligibility criteria does not apply for Q4 of 2021, nor the 2022 tax year and beyond. And like the original program, you must report qualified wages as well as related health insurance costs on your quarterly payroll tax reforms. These are Forms 941 for most employers. Now, this refundable credit will be taken against the employer's share of the Social Security tax. So again, you're going to file an amended 941s for each period you want to retroactively claim the credit. The IRS will process the amended returns, which we call Form 941X, and then send you a check for the credits refunded. Sounds pretty cool, huh? While the ERC is a great tool to help struggling businesses reduce their tax burden, it's still a tad bit complicated to take advantage of it. And if you believe your company is eligible, you should immediately speak with your accountant and potentially your payroll provider. Because the credit size depends on how much you normally pay in Social Security taxes, both your accountant and your payroll company can help you determine how much of your credit and how much it's worth and how much tax should not be paid to the federal government. Now, a word of serious caution here. Do not take calls or emails from so-called ERC specialists. Most every one of these companies are charging you ridiculous fees, up to 30%, to help you fill out the paperwork to get your refund. It's unreasonable, unfair, and it's actually against the IRS's rules. So if they haven't read the fine print to know how they can charge you for this service, how do you expect them to have read the fine print to make sure that they're actually processing your ERC correctly? Only a financial professional can help make sure your application is correct and audit-proof, and a professional can do it for a fair fee and stand behind their work. When you go with one of these other shops that have popped up like weeds in the last year or so, you're going to seriously overpay, and there's no guarantee that they'll be there when the IRS wants to look at your calculations, and you don't want to take that risk. I'm dropping the address to my ERC page right down here at www.thegreenleafcpa.com/ERC. There's a summary of the program and a place for you to answer a few questions to see if you qualify. If you do, we can help, but you certainly don't have to use us. You can actually do this yourself or hire a reputable and knowledgeable CPA or payroll provider who will charge you a reasonable flat fee or charge by the hour. Just don't make the mistake of signing up with someone who says things along the lines of, "We don't get paid unless you get paid," or "We only charge fees at the end based on the refunds you receive." It's BS, and it's likely a scam. If you've enjoyed today's video, please give us a like, and if you'd like to see more, hit that subscribe button and click the bell. And if there is something that you're stuck on in your cannabis business, go ahead and drop a comment down below. I'd love to hear from you. It just makes these videos that much better when I get to help you with your cannabis business. Now, we drop new episodes each week, so I hope you'll join us again. We'll see you.